Want to know which investment could set you up for financial success? Stocks or index funds? Today, we're diving into the epic showdown between these two popular investment options. Imagine your money growing over time like a beautiful garden. But which seeds should you plant? The individual stocks or the sturdy index funds? Let's break it down. First up, let's talk about individual stocks. Picture stocks as rockets. They can soar high and fast, potentially delivering impressive returns. For instance, if you bought shares in a tech company 5 years ago, you might have seen your investment skyrocket as the company grew. Sounds exciting, right? But here's the catch. Stocks can also plunge just as quickly, leaving you wondering what went wrong. The thrill of the ride can be exhilarating but risky. Now let's shift gears and consider index funds. Think of them as a steady ship sailing through all kinds of weather. Index funds are designed to mimic the performance of a specific market index, like the S&P 500. When you invest in an index fund, you're buying a little piece of many different companies, which helps spread out your risk. So if one company struggles, you're not completely sunk. Imagine investing in a diversified portfolio without having to pick and choose each individual stock. Sounds simpler, doesn't it? Now, let's dig into the pros and cons of each option. For individual stocks, the biggest pro is potential high returns. You have the chance to choose companies that you believe in, ones that you think will outperform the market. However, this comes with a significant downside risk. If you misjudge a company's potential, your investment could suffer dramatically. Plus, picking stocks requires research and time to track performance, making it a more hands-on approach. On the flip side, index funds offer lower risk through diversification. They generally have lower fees, too, which means more of your money stays invested. Historically, index funds have outperformed many actively managed funds over the long term. But here's the twist. The returns are usually more moderate than those from successful individual stocks. You won't see those rocket-like gains, but you also won't experience the gut-wrenching drops. So, how do you decide which one is right for you? It all comes down to your risk tolerance, time horizon, and financial goals. If you're young and can afford to take risks, individual stocks might excite you. But if you prefer a steady ride with less volatility, index funds might be your best bet. Let's consider a hypothetical example. Imagine two investors, Sarah, who loves researching companies and takes the plunge into individual stocks, and Mark, who values a more laid-back approach and chooses to invest in index funds. Over 10 years, Sarah might hit the jackpot with a few stocks but could also face losses. Meanwhile, Mark's investments may grow steadily, reflecting the overall market. Before we wrap up, remember this key takeaway. Investing isn't just about picking the right stocks or funds. It's about aligning your investments with your personal goals and comfort level. Now, it's your turn to weigh in. Are you team individual stocks or team index funds? Drop a comment below and let us know your thoughts. And don't forget to subscribe for more investment insights. Next time, we're covering a hidden gem in the investing world that you might not be paying attention to. Don't miss it. Until then, happy investing.